Oh man, you've got the Fed and Janet Yellen coming out to protect the banking system, which is creaking. You've got Bitcoin forming a bearish pattern here, which I have to share with you on the 4-hourly. We've also got various positive looks on Bitcoin, which has now finally broken through 28,300 with a major weekly close. UBS has bought Credit Suisse. Loads to get into. Smash up likes. Don't forget to subscribe. Let's start off with the bearish news and then I can get on to all the bullish stuff. You can't say I don't share both sides of the perspective. Here on the 4-hourly chart, we are producing a rising wedge. Now, why am I not bothered about this? Because it's healthy to get a pullback. I'm going to show you all the bigger time frame patterns we are forming and how this doesn't lead to any concern. If we do want to fall from this pattern, I do see support coming in from 24.5 to about that 25,000 range, and that is perfect for a retest. I'm happy for us to retest 25,000. I know that seems crazy right now, but what we've managed to achieve here on Bitcoin is huge. We have our weekly close now above our EMA ribbon. This is major. We reclaim that 25,000 level. Nobody can claim otherwise. So now if we want to come back down from the top side to retest 25,000, that is not going to be an issue whatsoever. We know that UBS has gone ahead and bought Credit Suisse for $3.2 billion, a huge discount as you'd expect, and just further signs that the global banking crisis is in tatters. Guys, they're not trying to let on how bad this is right now. Silicon Valley Bank was already bad. First Republic, Signature, all these banks which are facing issues in the US, they're really bad. And now you've got Europe, who, by the way, this is a bit odd because Credit Suisse has been having issues for many, many years, but they're blaming the US and their contagion for affecting the Swiss banks. So this is huge now, guys. For anybody who doesn't understand, Credit Suisse is huge. Okay, look at this. So you can see here, Credit Suisse scale and potential impact on the global economy is much greater than US regional banks. Credit Suisse balance sheet is around twice the size of Lehman Brothers when it collapsed, and it's much more globally interconnected than Lehman Brothers was. Lehman Brothers was much more local than compared to Credit Suisse. So this is major, guys. You've got the consolidation going on there in the EU. But it doesn't stop there. We know that the US obviously went on and did their protection program for 25 billion. That has now led to a huge amount of printing. We've just seen the unwinding of the quantitative easing. They've gone ahead and eased by another $300 billion odd. That's 3 months of tightening that they were doing, this gradual drop down every month. Right? They've just unwound that in 1 week. And when you look at analysis done by JP Morgan, they're saying that 25 billion could be applied to a 21 leverage to really have a $2 trillion effect on easing, okay, in terms of a stimulus effect. This is huge. And this is one of the reasons we are starting to see crypto really start to get moving, as a lot of people are starting to see that the US are just printing infinitely. And if for those who have forgotten, here's an interesting clip from Neil Kashkari, who's the Fed president at the Bank of Minneapolis. Listen to what he said.
To the person who is about to grab their car keys and go to the ATM and take out $3,000, you say what?
You don't need to. Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
So it's clear as day, guys. We know that here in crypto. We know that the Fed have an infinite money printer and they're kicking it back into gear. And this is the other thing that's moving markets, because the Fed had an emergency meeting on Sunday. Okay, they don't have these very often, but on the emergency meeting, they said they're going to change the frequency of their liquidity swaps from weekly to daily. Anybody who's not familiar, liquidity swaps allows other central banks, European, the Swiss, the Bank of Canada, Japan, Bank of England, to go and get access to dollars. Now, this started back in 2008, 2007 time period where the FOMC said, okay, we're going to set up these liquidity swaps. We're going to do it weekly so that way central banks don't have to dump their treasuries. They're always going to get access to dollars. Okay, that was the whole point behind this. And during times of market stress, that's what happens. People want to go and get access and withdraw their dollars. So this is why they've now not only had to accept that, but they've changed it to daily now. So just further highlighting how much stress there is in the system. They don't want to let on, but there is stress in this system right now. We've got the FOMC meeting days away, 2 days away on Wednesday. We will be covering it. Smash up likes, make sure you subscribe, guys. We'll be covering that together. 62% of the market is pricing in 25 basis points. 30% of the market is pricing in a pause. We need to keep an eye on this over the next 2 days. Do not be surprised to see this change over the next 2 days. And depending on the direction, that could signal whether we're going to get pain or a pump on Wednesday. Because remember, if people start to pricing a pause, but we don't get a pause, that can cause pain in the market. If people don't price in a pause, this percentage falls, and they say, oh, we're going to get 25 base points, but then the Fed has to pause. Do not be surprised to see the opposite than expected happen, okay? Normally, you would expect a rally if you got a surprise pause. I don't think we're going to get that. If we get a pause, that is basically the Fed waving their white flag and saying, you know what? We're not in control of this mess right now. This is bad. So if we see a pause, guys, on Wednesday, this could have the opposite impact. Do not expect a rally. Expect the market to go, hang on a second, why are you emergency pausing? What have you broken? And what have you not told us about? So we will be keeping a close eye on this on Wednesday. Make sure you do join us for that. Of course, if you've not watched my video from yesterday, make sure you go watch that. You've got Balaji coming out and taking all the headlines right now with his crazy prediction that Bitcoin's going to get to $1 million in 90 days. Now, if you could look past the sensationalism, we can understand the message being shared. I think DeFi Edge does a really good tweet on that. Definitely go check this out as well. He's basically saying, look, it's a PR marketing stunt, which I completely agree with, right? It's a complete PR marketing stunt where you just say, look, directionally I'm right. Bitcoin's going to do well over this next period, but let's keep things focused, right? Let's ignore all the PR going on. Let's understand, why is Bitcoin moving? We know very clearly that Bitcoin is a function of liquidity. When the Fed is on our side, what have I always said? I said, when the Fed is our friend, Bitcoin will do well. When the Fed is not our friend, like throughout 2022, when they're rate hiking, Bitcoin suffers. So Bitcoin has this duality role. It can act as a defensive asset. When things hit the wall, when the proverbial hits the fan, Bitcoin can act as a defensive stock. No different to how gold performs. That is what we're seeing right now. In times of fearing of the financial crisis, you do see that. And this financial crisis I warned about at the end of 2022. You go watch the videos. I said this is not just going to be a normal recession like people are trying to say, or a soft landing. We could be heading into a global financial crisis. And that's starting to happen again. And the reason I knew that was I was working in TradFi in 2008. I recognized all the same signs, and you're seeing that play out now. And I think there's more to happen. I think there's another collapse we don't know about that could be around the corner. I hope I'm wrong. I just get that feeling that there could be another major, maybe a US bank, maybe another one in Europe that could be collapsing or struggling right now. And if the Fed don't help them through measures like this liquidity swaps program, we could be facing a bigger issue. Now, the other side of things is that Bitcoin will simply move on the excitement that we're going to see a pivot. And that is one of the reasons we started seeing the markets move. We're starting to see that because of all the banking stress, the Fed are going to have to pivot at some point. Whether we get another 25 base points or maybe even 2 more and then a pause, the market's getting excited that this run of tightening is coming to the final innings, and it won't be long before we pause and then start cutting rates. And what happens when you start cutting rates? Bitcoin does well, money supply increases, and Bitcoin is of course a function of that liquidity. Let's now jump into the Bitcoin chart, and you can see here, guys, that Bitcoin has been in these triangles, breaking from this triangle, formed another falling wedge, broke to the upside here, collecting support from the EMA ribbon, and performing generally quite well. If we take a look here on the 4-hourly chart, our ascending broadening wedge continues to play out very, very nicely. Again, if you want to take the measured move, guys, you can take the measured move from here like this, and you can apply that to the point of breakout like I've done there, and you can see that this price target brings you up to that 33,000 as well. This is called confluence. Again, if you haven't worked through my TA course, ijaz.uk/TA, I spent a whole chapter talking about confluence. And confluence is where different indicators and different tactics, which you'll learn throughout the course, is completely free, will start to tell you the same story. And that's what we're doing now. I'm using various different charting patterns, various different indicators, and they're telling me that that 29 to 32 sort of range is a nice clear range. Now, do I expect a pullback? Potentially, yes. I'm happy to see a pullback down to 25 for us to retest that level and then work to higher highs through 30, because it looks like we are getting a little bit oversold here on the 4-hourly chart. You can see the RSI here. If you zoom out to the daily, you see there is still some room left on the RSI. I mean, if you look at the run-up we had earlier this year, we were definitely much more overbought here. And so potentially some could argue we've got enough energy here to get to 30, 31, 32, and then maybe have a little bit of a pullback down after we've had that leg up. The other pattern which we were monitoring was this ascending channel as well. We broke nicely to the upside of this channel. Measured move again brings you to that 33,000 range. We're well on our way to that. Again, I'm perfectly fine with this having to come down, collect a retest, and work its way gradually. I don't just expect it to go boom straight to the moon. That's not how crypto works, or any asset. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. On the weekly chart, the other important pattern we've been watching is this inverse head and shoulders pattern, breaking very nicely. Inverse head and shoulders pattern gives you a price target of 35. A little bit high for me, because I think this cluster of resistance here will prove to be quite challenging, but again, happy for it to have a retest of the neckline. The neckline sits at 25,000. So if all these different chart patterns want to come back and retest, that's perfectly fine. I'm not going to be panicked out by a retest of 25. We've had such a nice move here. We've closed our weekly candle above the EMA ribbon. Things are looking really positive. That, along with the global narrative, gives me real confidence that we're entering a very difficult time for the traditional markets. Traditional markets are in a pickle right now. They're having to come out and they're having to protect their system. They're going to have to turn that money printer back on. We could be entering a period of really high sticky inflation. Some people are shouting out hyperinflation. Do I think we're talking hyperinflation? No. I mean, if you look at hyperinflation here, I pulled up the definition for you guys. You're talking inflation is hyperinflation when it grows at a rate of 50% every month. Right? This is significant inflation. So some people are just throwing it around for a bit of marketing hype right now. Look, there's a potential you could end up there. But I think for now, let's be just rational. We are facing a period of sticky inflation. I think that's fair to say. We've got sticky inflation, which is proving difficult to get rid of. Jerome Powell and the Fed thought they could bring it down to 2%. And the reality is it's much more like sticking around that 5-6% for a little while. It's not as easy as they thought. Is it hyperinflation just yet? No. But Bitcoin is going to move on some of this news nonetheless. Speaking of the hyperinflation news, it's worth looking at, of course, what's going on with Balaji. Balaji went ahead and made a bet. Okay, so he put a bet along with another chap named James Medlock. He said, I will take that bet. You buy 1 Bitcoin, I will send $1 million in USD. If Bitcoin is less than $1 million in 90 days after escrow, you will win and get both the 1 Bitcoin and the $1 million USDC. If Bitcoin is more than $1 million in 90 days after the escrow, I win and get both the 1 BTC and now the worthless $1 million USDC. Now think about it, guys. But he's clearly being facetious. If he actually thought that Bitcoin was going to be above $1 million and USDC was actually going to be worth 0, then he's not coming out of here very successfully, just getting his money back. Why would you place that bet? You do it for marketing reasons, right? So guys, you've got to be a bit smart here with the sensationalism. But again, the point remains, don't let that deflect away from what's actually happening, which is that the markets are starting to price in that we could be coming away from this tightening policy. Bitcoin has now made a major shift in the chart. Now, one final thing I do want to wrap up on, particularly for people who are new to crypto, is this does not mean we are going straight to the moon. These people are saying we're going to run straight to 100,000 and 200, 300,000. It's possible, but if we look at the data, it's not probable just yet, because I want to show you the previous cycle. And you guys know throughout the bear market, I referred to the previous cycle. History doesn't repeat, but it does rhyme. Bitcoin ran to its peak of 20,000 odd. It came all the way to its bottom of 3,000. So our relative numbers is our peak is 69,000, which we hit in November 2021. And now our bottom, if it is the bottom, of course, which it looks like, is 15,500. But what happened next? Bitcoin went soaring, and it soared all the way up here to this yellow line at about 14,000, let's call it. So in that moment, people were screaming that Bitcoin is going to go to 50, it's going to go to 60,000. It didn't even get back to all-time highs. And that's what I want to remind you of. It took a long period, it then fell all the way down here in March 2020 because of the pandemic, and fell all the way down to 4,000 before then finally getting its crazy run up to 64,000. That's the next bull market. So I do want to remind you, we are about here, somewhere here in this position. We formed our bottom, we're starting to move our way back upwards, but again, we can hit a peak and come back down for a retracement. So be prepared for a roller coaster. There's no guarantees that this is just going to go straight to the moon again. The other thing worth looking at here is the Bitcoin dominance. Bitcoin is running now into very important resistance around this 48% mark. We have seen it get rejected in July 2021. We saw it get rejected in October 2021. We saw it painfully get rejected in June. Will we get rejected from here? Remember, a break to the upside and Bitcoin can go absolutely berserk, and it'd be a very Bitcoin-led move. A move to the downside, and you could see altcoins giving better risk to return. And this is why I love to have a balanced portfolio. A lot of people become Bitcoin maximalists. A lot of people just have altcoins. I want to have a good position of both. You guys know I say eat your veg. Bitcoin and Ethereum, I've got to eat my veg, because in moments like this, Bitcoin will just go, and your portfolio will not look fantastic if you just have altcoins. But similarly, if Bitcoin was to get rejected and altcoins will have its move, that money flows from Bitcoin into altcoins as more and more people start to become familiar with crypto. Really exciting time to be in the crypto markets right now. You are seeing Bitcoin start to prove its position of being that defensive asset, with the traditional markets continuing to creak at the helms. Traditional finance continues to prove that they have not solved any of the problems that caused the previous financial crisis, and that they continue to demonstrate the same weaknesses and malpractices that got them into those predicaments in the past. This all bodes well for crypto, which was created as that antithesis, as that hedge against the traditional markets. And that is one of the reasons, along with the Fed pivoting and starting to ease policy and quantitative ease again, allowing Bitcoin to see some green action. Hope you guys enjoyed. Smash all the likes. Don't forget to subscribe. Go check out this video here, and I'll see you in the next one.